If I told the world what I know is really going on, they would kill me. It's frightening.
What is going on in the world right now has never happened in the history of the world.
So I've already been warned many times to stay in my lane. Don't go into medicine. Don't go into this virus. I was crossing into pharmaceuticals. Stay teaching people with my little cash flow game. Stay in my lane. We'll get you. Stay small or we'll stomp on you. So what you and I are doing right now is very dangerous. Watch what you say.
Because it's really about the future.
Before the end of this decade, a new technology will emerge and the future will be shown to us.
Because I think this clear a vision of the future is possible. So I want you to pay attention. I don't care where you live in the world, watch the video, because otherwise words will not do it justice. You're going to see what 99.99% of the world's population will never see. I won't talk about conspiracy, but something's fishy about this corona crisis. Why did they have to shut down the whole damn world? And I think it's because they're covering up something very, very big. And in September 2019, the shadow banking system collapsed. And that's why the Fed and the Treasury are printing tens of trillions of dollars all over the world. So when Corona appeared, I think it was an excuse to shut down the world economy to cover up what really happened. So in March of 2020 was the biggest crash in world history of the stock market, but nobody knows anything about it because everybody's quarantined at home thinking about coronavirus and social distancing and wearing face masks. So people are missing out on one of the biggest catastrophic cash heists in the history of the world. They don't even know what's happening. Now, the good news is, I'm going to make a fortune. This is the best time if you're ready for it. Just know you might be missing one of the biggest opportunities in the history of the world because our governments have really screwed up.
Theory is one thing, reality is another, and it's frightening. I'm okay because I was ready for it. My wife and I, Kim, were just sitting there having an expensive bottle of wine, toasting each other because we made it. We came through heaven and hell to make it. And it was worth the journey, but to not know if what I was forecasting was going to come true was self-doubt, we all have self-doubt. So it's time to move on. The prediction you're talking about here is Rich Dad's prophecy. And it was about the crash that would come in 2016. Well, it came 4 years later, 2020. But I didn't foresee, in 1999, I didn't foresee quantitative easing and money printing. I just didn't see how dastardly how the people that control the world are. And then to have it come through via a virus, or what Nassim Taleb calls a black swan, even more dastardly, and then to shut down the whole world's economy and put millions of people out of work and destroy small business owners, the lifeblood of the world, to save the rich, the really, really rich, is, I think, criminal. It's really the most exciting time. It's also dangerous. Because the moment I started tweeting about the coronavirus, whatever it is, I was told, stay in my lane. Stay in my lane. We'll get you. And that's exactly what Fuller said back in '81. He says, if I told the world what I know is really going on, they would kill me. So what you and I are doing right now is very dangerous for our personal lives, our professions, and all this. So all you listening out there, be a wartime leader. Watch what you say.
We're here about preparing, not predicting. Unfortunately, a lot of people have found out the hard way through shock that they were not prepared when the coronavirus hit, and who could have predicted that? But so now we have an opportunity to hear from an expert on what you see, Brent, coming down the pipe.
Essentially what I think has happened over the last 10 years and what I think is going to happen over the next few years is that the world after the financial crisis, the central banks just got together and just printed all this liquidity. At the end of 2015, beginning of 2016, the U.S. stopped mixing the milkshake, and we started raising interest rates. And the raising of the interest rates from 2016 to 2019, combined with a number of other factors. It's not just interest rates, but interest rates were a big factor. And the fact that our interest rates, while they've come down a lot, are still higher than Japan and Europe, who have negative rates. That, along with these other factors of having the global reserve currency system, having the dollar payment system, having the largest U.S. military, having the deepest capital markets, all of that stuff acts as a straw which sucks up all the liquidity that the world is printing. Now, there's dollars in the United States and there's dollars outside the United States. The dollars outside the United States are called euro dollars. It's different than euros, so you don't confuse euros and euro dollars. But at the end of the day, whether you like the dollar or whether you hate the dollar, whether you think it's a good currency or a horrible currency, the fact of the matter is it is the currency which the world runs on.
Your best investment might be the US dollar.
I'd say that the main difference pre-corona and post-corona, from my point of view, is the extent to which the United States is going to help mix the milkshake going forward. Before, I thought that we might mix it a little bit and the rest of the world would continue to mix it a lot and we would suck it in. Well, now I think we're in there mixing it with them. But I still think, for a number of reasons, the U.S. is going to be the primary recipient of sucking in all that milkshake, all that liquidity that the rest of the world is, and that we are now printing, or the liquidity that we're putting into the market.
So the world's printing money, but that's going to flow to the U.S. is what you're saying.
Exactly. And as that capital comes into the U.S., I don't just think it sits in cash. I think it gets put into places that yield a little bit more than cash. Maybe it goes into Coca-Cola, maybe it goes into IBM, maybe it goes into Electronic Arts or Microsoft, some of these companies that have some growth potential that maybe pay a dividend. And to think about it, it really depends on where you're sitting on how this works out. If you're sitting in Argentina and you have some excess savings and you can put it in the dollar and the Argentinian peso goes down 10%, you've just made 10%. But if you also put it in Coca-Cola and Coca-Cola pays you a 3 or 4% dividend, now you've made 13%. And if Coca-Cola happens to go up 6%, now you've made 20%. So, now you don't get that same thing if you're in the United States because the dollar is your currency. But my point is that whether you like it or not, the biggest demand for currency out there is the demand for the dollar. And despite the fact that they're printing a lot of it, the demand for it dwarfs the supply.
And with the coronavirus, because we don't know what is coming with that, how do you see, in your world, what impact does that have in the future?
Well, it has two impacts that are absolutely opposing each other. And it's a progression. So what I mean by that is the whole COVID virus has caused global trade, global travel, global movement to stop. And that means the same for the velocity of money. So, there's never enough money in the system to pay all the debt. So money has to circulate at a certain level of speed in order to service all the debts that are out there. When money velocity falls, money doesn't circulate, people miss their payments, or defaults happen, and you get a contraction. That's a credit contraction. And so what the central banks do is they pump liquidity in to try to counteract that lack of velocity. And so what I think this COVID and the lack of the flow of money is making the global economy come in under even more pressure than it was before. It makes it even harder to get those dollars to service that dollar debt. And so I think it's kind of accelerating the downside of the milkshake. But here's the flip side, is they're going to print all these dollars and all this currency, right? And so when the COVID does leave, and money is start to flow again, now you've got a lot more money out there and now it's flowing. So that's a recipe for inflation. But first you get the deflation, you print all the money, and then when the money starts to move, you get high levels of inflation because there's so much liquidity now. So again, I don't think we're there yet, but that's what's setting up. So I think we have deflation, for the next year, 18 months, and then we have inflation after that as capital starts to circulate again.